Well, hello folks, I'm L.A. Little and this is your weekly NeoTA wrap. We take a look at these markets, we do it from a neoclassical perspective each time, asking ourselves what happened last week, what does it tell us about the coming months. I do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel L.A. Little. You can subscribe and view the content anytime content's pushed. You'll be notified. As far as these markets, they did what they do best, and that is they grind higher. Last week, slight increases. NASDAQ, biotech, stocks helping, but big cap tech was what was moving it, in particular Apple. Stocks are actually the NASDAQ's leading the charge, everything else about 3%, a little bit over. So, it's up and away. It continues to grind higher and just does not want to give it up. If we look at some of these indexes, see what they're doing, we can see here on the Dow that, got a nice big push here over two swing point highs. You would expect that to continue. Well, it pulls back. Now it breaks some more. You would expect that to continue. No, it pulls back. Coming back in, doing a retest regen off of this bar right now. And actually what you're seeing across the board is a bunch of these retest regenerates taking place. And in the Dow, it's here. You've actually got one here. It just failed. And excuse me, that not failed. That was the breakout. So you're under the breakout bar, but you're back into the retest regenerate zone. But you're coming back into a bunch of them. I would expect, or we should expect, that should offer some support. If we look at it here on the weekly, it's a failure at the top, 4437, you did 4096, you go over it, back under it, that's a failure. So you got a failure on the weekly, daily's just doing a retest regen. If we look at the S&P 500, you're right, S&P gets a breakout, and if you look at that was a breakout on multiple time frames. You would expect that to push 2 to 3 bars on the longest time frame. Well, that's the weekly, and it's over, and it did push, but man, is it a struggle. It continues to be a struggle all the way up. Sideways all week long. Got a push on Monday, sideways, right? That was the breakout on Monday over the swing point high. Volume tails off. Of course, we were coming into the holiday weekend. One could say, well, maybe it was because of that, but I don't think it's here, it's over there. NASDAQ composite goes over, back under, again, just like it did back here. Now, actually on the bar prior, now it comes over, back under, it's getting close to the top, struggling. All of them struggling. NDX, same sort of thing. NDX is trailing, but volume tailing off and so forth. If you look here now, NDX had broken out on this bar, trying to push higher to get back to the top. The volume's up there, it wants to test the top, and that's what they're trying to get up and do. Russell, more of a reflection of the domestic economy, and you can see how it's struggling, can't get back to highs. But the Russell, if you look at the Russell on the weekly, it's over the breakout. It's held twice on retest regens. So if I'm looking for negatives, there's not a lot of negatives in the market. I mean, the market continues to hold up. It's just that it's grinding, and it's grinding in a very difficult manner, trying to get back up to where it broke down from. In this case, it's this breakdown bar. That's where all the volume is. On the NASDAQ NDX, they're trying to get up and test that bar. That's where the volume is on those. And, in general, just not a lot happening. And so I'm not going to try to read between the cracks here and tell you this or that in terms of domestic markets, because honestly, I don't think it matters that much here. I think what really matters is over there. And I've talked about that a lot, and I'll continue to until it changes. And that is if we look at the DAX and we look at Europe, the DAX is up here doing a bearish retest regen. It's doing it off these prior two swing points. The ones that were broken, right? There's two of them here. The overlap is in this area. And so, when we look at this is where it should struggle. That is where it's struggling. Now, if this starts shooting up, it's a whole different story. But right now, it's struggling. And if we look at the dollar, the dollar at the same time is starting to get its mojo back and starting to go the other way, right? Bouncing back up. It wants to do a bearish retest regen here. We'll see what it does when it gets there. It's not that far away. I would expect it climbs up into that. You've got double here, so that's your, that's the zone that's most prevalent where it should try to fail. That's where it's trying to go to now. As the dollar goes up, right, FXE goes down. When the FXE goes down, that makes the struggle on the European markets. And here's the FXE. You can see how it finally got under this low, back into this high. So what is it doing? It's doing a bullish retest regenerate off of this bar. It can get to the bottom of the bar. It is the first time back after more than 6 bars. You would expect it wouldn't get deep. It would instead bounce out of here. That's typically what happens. But anymore, markets aren't typical. They're not typical at all. Going back to the DAX real quick, I want to show you on the weekly, this is just a range trade. We talked about a range trade setting up a while back. That's in fact what has happened, right? You've got the range. It gets down, tests the bottom, comes back up, and what is it doing now? Well, it's testing right back into that area. If it's going to fail, this is where it's going to be. If it's not, well, then it can climb right back up here to the top and test the top range. So this is the area. This is where, the rubber meets the road, so to speak, on these indexes. The CAX has been stronger. CAX is doing the same thing. Now, the CAX has definitely told us it's a range trade because the the CAX has gotten back over the lowest of the bars that it broke. So that retest, bearish retest regen failed. So what is it doing now? It's coming up to the next set of those, and they're here. Where's the overlap? Right where it is. Again, this is where you would expect the failure to take place as it climbs up, running out of juice. It's going to have a hard time getting over this area. But, again, these are not negatives. It's just range trades. If you want some real positives, though, just walk over to Asia because you got the Hang Seng heading back towards the highs. And this one never got deeper. It is still a range trade, but I don't know how much longer it's going to be a range trade because if you look at the Shanghai index, which is pulling this one higher, that one breaks out. So you got an ABCD structure on the daily chart, right? This finishes off, continues to go, gets over this. So now you're looking to see, will it come back in immediately and try to do a bullish retest and regenerate higher? So the way that would work would be some sort of a pullback into here and another ABCD structure to the top side. Got volume as it broke out, not enough, but that's why it's red bar here on the breakout, but enough to say, hey, this thing can try to push higher. And finally, if we look at the Japanese are up there testing the highs, trying to get over them, extended, yes, failing at that level, did stay over it on Friday. If you look at it on the weekly, it's at new highs, volume's pretty decent. And what is this all about? Well, it's like everything else. It's about currency devaluation. If we go over here to the yen on a weekly, you can see how it's breaking the swing point lows on the weekly, trying to take it lower. Low here, 79.98. This one, 79.96. Where does it close? 79.91. So it's under 2 swing points, multiple time frames. Typically, that says this thing is going to push lower. And if it's going to push lower, folks, that Japanese market's going to go higher, and this yen is going to get crushed again. It consolidated for what? December through May, so 6 months now of consolidation. So if it's going to take off now after 6 months, you had a big consolidation up here before, big move down. Is that what we expect now? I expect it at some point. It may be now, and certainly the charts are setting up to potentially do that. The only real negative, if I had a negative last week, it would be in the sectors. So let's take a quick look at that one. And that one is here with the IYT. So the transports sell down. They break 2 swing point lows. Let's mark them out here so you can see them. So this would be the retest regen zone now. So they break these 2 swing point lows. And on that break, right now you have a situation where if they pop back up there, they're going to be doing a bearish retest regen into that area. Two here, most importantly, another one over here breaks this one. And so now you have multiple swing points, multiple time frames breaking. Volume escalating, right? As it breaks, that's why it's green. It's confirmed breakdown. What's it going to try to do next? It's going to try to come all the way back down here to the October lows where all the volume sits and come right into the highs of those lows. So if you're playing with transports, take note. It might be a tough road here. And if the transports are doing this and the Dow is up there trying to set highs, you know you've got some sort of a huge divergence, especially in the Dow theory. It's going to resolve one way or the other. And typically, this kind of scenario doesn't resolve well. But you know, in this market, with QE around the world, with the Federal Reserve, the central banks elsewhere, continuing to push these markets, I'm not so sure I would bet on history right now, but instead would think more about, you know, is this just another one of those exceptions? Because so far this year, the exception is the rule. So if I had to tell you what I thought was going to happen this week, you know, we've got a holiday shortened week tomorrow, off here in the States, off in most of the markets in Europe. So it's going to be a quiet day probably elsewhere. And then when we come back, I think the real test is going to be how does this handle as it comes back in and tests some more, the swing point high? Does it break back down into it? And if so, does this just roll back over or not? That is going to depend heavily on what happens in Europe and what happens in Asia. Asia's still trying to go higher. Europe looks like it's about to the point where it could pull back, but still hasn't given us the signal that it will. So it's still a mixed market, a mixed set of signals. Tired, heavy, yes, all those things. Grinding higher, still doing it. Doesn't want to give it up. And if you think about it, why would it give it up? Nobody has any other place better to put their money. You still have mergers and acquisitions going on, right? You still have corporations buying back their stock as if it was, you know, cotton candy. You've got all those things going on. There are some negatives, of course, but I mean, those are the things that are keeping it higher in the QE around the world on top of all that. So it's very hard to see the catalyst to drive this thing substantially lower. If we come lower, it's probably going to be just like we've seen before, and that is as it comes lower, the buyers dip in and start working it back up, right? And that's what's happened pretty much all year long, and I suspect it's going to continue. Folks, thanks for joining me. Have yourself a great night. I'm LA. This is, and it was, your daily, or actually your weekly NeoTA wrap. Have yourself a great one. Have a good holiday, and I'll see you on Tuesday. No show tomorrow. Good night.